What is going on, guys? Welcome back to another brand new educational video. Before I start the video, please go ahead and follow me on Instagram. Most of my predictions or trade setups I've always been sharing on my Instagram. So if you want to take advantage of sorry about that. If you want to take advantage of these trades, it's completely free. Just go ahead and follow me on Instagram and it'll be in the first comment below. Also, this video, including all the other videos on my channel, are not an indication for you to go ahead and invest your money. Online trading is a very risky world, and please make sure you do your own research before entering this world. And I'm not a financial advisor nor an investment advisor, so don't take my word for anything. Okay, these videos are only for educational purposes. Just me, a random guy, sharing his knowledge with you guys, and that's it. Okay, having said that, let's jump into the video today. Okay, so today I took a trade on gold, which I've been looking at for quite some time. So if you follow me on Instagram, you know that I called out this bullish move or a small pullback by gold last week. Okay, and the reason why I called this out is because I saw that gold was in a downtrend. Okay, at the end of this uptrend, we had this small downtrend to the downside, and I saw that the price was approaching this major trend line. As you can see, we are on the 4-hour time frame, so there was a very high chance that the market was going to respect this trend line, which it did. Okay, now there was a fake breakout, and as soon as I saw this bullish candle, this white candle, climb back into the trend line area and then had a retest here, I knew that the market was going to go up from this point on. So I called this out as well. But I didn't take a trade on gold up until this point today. So I saw that the market was struggling to break beyond this resistance right here. And if you extend this, you can see that even in the past, this was a strong resistance. Right here, the market broke above, came back down, broke above, became a support for a bit, came back down, became a resistance again. And over here as well, if the market was to break through this resistance again, it would have just done that. It would have just done so. It wouldn't have retested it again and again, right? And this is on the 4-hour time frame as well. So if you go down on the 1-hour time frame, you can see what really was going on. Market was trying to break through, couldn't, right? So I was looking at it on the 4-hour time frame until I noticed that the market was making equal highs over here. Relatively, okay, so the market was making equal highs, but on the indicator, on the OBV, the market was making, starting at this peak up until this point, the market was making higher highs. So equal or lower highs, but on the OBV, the market is making higher highs. What does this indicate? So if we open our cheat sheet right here, which I use all the time, so the market is making equal or higher highs. The market is making equal or lower highs, but the OBV or the oscillator is making higher highs, which means bearish hidden. Bearish hidden means that the trend is going to continue downwards. Okay, so if there's divergence on the 4-hour time frame on the GBP pairs, I would normally go for 150 to 200 pips as my take profit. And on the gold, same thing. So if there's divergence on the 4-hour time frame, normally my take profit would be 100 plus pips. In this case, I was aiming for 150, and that's exactly what happened. So the market hit 150, but went for, I think, more than 200 pips from my entry, which was right here. I think it went for 232, 233. So more than 200 pips, right? But that's not my goal, to catch the whole move. You just take what the market gives you and you leave. That's the whole point. If you stay in for more, the market is going to come back and take your profits away from you. So very nice trade almost no drawback or no drawdown. The market just went for the take profits. I didn't even go into loss for one moment. Very, very beautiful trade. I love such trades. Happens very rarely, but whenever it happens, it makes my day. So another trade that I want to show you guys, I took last week on GBP JPY. So the market was in a downtrend and started making higher highs, but when it came back to this region right here, to this resistance, which was a very strong resistance even in the past, the market came back for the third touch on this resistance, and you can see the market is making relatively equal lows or lower lows, but on the indicator you can see that the market is clearly making higher lows, higher highs. So once again, the market is making equal or lower highs, but the indicator is making higher highs. What is this? Well, the same thing. Market is making equal or lower highs, but on the oscillator or the indicator it's making higher highs. Bearish hidden divergence, also on the 4-hour time frame, which means that the market is going to continue lower. Now, in this case, I didn't go for 100 because there was a very strong support over here as well. And why was it a strong support? I'll show you guys. So in this case, I went for 90 pips. I think my trade closed automatically at 93 or 92 pips. I don't remember, but it was somewhere around that area. Now, why did I exit my trade here? Well, you can see we had previously this support. And why is this a strong support? Well, it was also a resistance in the past. If I extend it further, you can see that, there we go. You can see that it was a resistance, became a support, became a resistance again, became a resistance again, became a support over here for a while, became a resistance, became a support again. And not only that, if you see over here, the market is making equal lows, right? Now, if you look at the indicator, the market is making, oops, I have to zoom in, okay. So starting here, okay, the market is making starting at this low, so this low till this low, market is making higher lows, right? So what is this? Well, market is making equal or lower lows. So right here, equal or lower lows, but the indicator is making higher lows, and this is bullish regular. Now, in my experience, the regular divergence is always more powerful and more trustworthy than the hidden divergence. Hidden divergence, you don't really know when it's going to happen, but bullish regular, if you see regular divergence, bullish or bearish, I am going to take this trade. Bearish or bullish hidden, sometimes I'm not really sure, but whenever I see regular, I'm pretty sure. Now, I could have bought this pair over here, but I didn't, unfortunately, and well, that cost me 470 plus pips. Well, I wouldn't say cost, but it would have been nice, if I would have taken this trade. But I moved on to some other pairs. I took other pairs, other trades, so all is good. Okay, so this green line is where I entered for a sell, took my 90 pips and got out of the market. Now, if I had wanted to go for this support, for example, right here, well, you can see what would have happened. So just thought I would show you guys these nice little trades. I'm looking for more, obviously, in the market this week. Let's see if USD is really weak right now, so let's see if USD can gain its strength back. As you can see, USD has just been falling and Euro has been climbing, GBP has been climbing. So USD is really weak right now, so I'm looking at a couple of pairs for reversals. Hopefully this week, if not this week, then next week we'll see some action. And that's it. I hope you guys learned something from this video. Really simple, really straightforward, no rocket science, no crazy strategies, right? And that's it. I'll see you guys in the next video. Peace.